Welcome everyone to another fantastic Learn at Lunch. Today we've got a really fantastic program for you today with our friends from WESCOM on home buying part 2. I don't know about y'all, but the market is going crazy and it seems like, when I came to LA 5 years ago, I thought, I'll just wait for the market to crash before I buy in. And 5 years, it's risen every single year. So at some point, I need to actually just pull the trigger. So I'm very interested in particular to hear this speech today. So sit back, relax, have a fantastic lunch. Feel free to eat your lunch while we're talking. We're a pretty relaxed bunch. Oh, and I do want to say that as a land grant institution, Staff Assembly at UCLA acknowledges the Gabrielino and Tongva peoples as the traditional land caretakers of the Tavangar. So with that, I'm going to turn it over to our friends at WESCOM. Sal, take it away.
Thank you, Joy. Good afternoon, everyone. Happy lunch hour for all of you. My name is Sal Murguia. Thank you for joining us on this. I'm the Partner Development Representative with WESCOM Credit Union. I'm assuming that a number of you had joined us for part 1 of this presentation, and now we're back for part 2. So it's great to see a number of you joining us on this call today. Joining me this afternoon is my colleague in Partner Development. His name is David Bochter. David Bochter is going to be monitoring the chat and assisting our presenters with answering your questions. And we will be rewarding a lucky participant this afternoon as well at the conclusion of the event, and David's going to assist on that. Also joining me is Aldo Ramirez. He's the Assistant Branch Manager at the UCLA Campus Branch and Ackerman Student Union. And Aldo will be here to help you answer any type of questions that you may have in regards to WESCOM in general. And I will be introducing him again in a brief presentation overview of WESCOM at the beginning of the discussion. And then our featured speakers are Gary Hernandez, the Director of Real Estate Loan Originations at WESCOM, and his colleague, Tracy Lopez, who's the Mortgage Loan Officer at WESCOM as well. So they have a lot of great information that they're going to share with you this afternoon. But let me just do some housekeeping real quick, just to remind everyone of who we are and what we do and some of the happenings that we have going with WESCOM. I'm not going to spend too much time just explaining who we are. A number of you have already seen us, but we are WESCOM Credit Union, one of the largest credit unions in Southern California. And we have 24 branches in Southern California, including our campus branch located at Ackerman Student Union. We are similar, we are a nonprofit cooperative. We offer the same types of products and services that you find at a bank, but since we are non-for-profit, we are able to give you lower fees and lower rates than our banking competitors. Being the WESCOM's here to establish a partnership with UCLA. So we are the official banking partner of UCLA Athletics, Campus Life and Recreation, and Alumni Association. So we're going to be a resource here on campus for UCLA, and that includes staff and faculty, where our goal is to help Bruins build better lives and creating financial healthy habits for Bruins, and we want to make banking easy for you. So I want to introduce Aldo again, Aldo Ramirez, the Assistant Branch Manager at UCLA, because I want you to grow accustomed to Aldo, his team, his branch manager, Martha Prado, and let Aldo speak to a special promotion that we're having and give you some background on the UCLA branch as well.
Thank you, Sal. Hi, everyone. My name is Aldo Ramirez. I'm the Assistant Branch Manager to the WESCOM UCLA branch. Just wanted to give you some brief information in regards to the location, the hours, or whatnot. We are currently located inside the Ackerman building on the first floor, right next to Panda Express. The current management team, like Sal mentioned, Martha Prado would be the branch manager. I would be the assistant manager, of course, and we also have Marquise, who's the supervisor of the branch. The branch is currently opened Monday through Friday from 10 a.m. to 5 p.m. So we definitely encourage everyone to stop by if you have any questions, comments, or concerns, or regarding anything in regards to promotions or whatnot. Definitely stop by. We want to get to meet you. We want to have these conversations. Stop by. We could give you hand sanitizers, masks, all sorts of little things that we have going on right now. And also to show our appreciation to our UCLA faculty and staff, we have a great promotion. We have a promotion where if you were to open an account with WESCOM, you could potentially earn up to 3 rewards by opening an account. The first reward would be where if you open an account, you get a UCLA tumbler, where one lucky winner will have the opportunity to win a $100 gift card to the ASUCLA bookstore downstairs. So that's great. The second reward that you could potentially win would be where one lucky winner will have the chance to get their parking permit paid by WESCOM at UCLA. So that's another great bonus itself. And lastly, the third reward that we have going on right now would be where, of course, if you open your account, you could potentially receive up to $500 just by opening an account with WESCOM. In case you guys have any questions or concerns, like I said, please stop by the branch. What I'm also going to do is I'm going to insert my my work email and also the branch's email in case you guys want to send those questions through email. We'll definitely respond right away. And that's pretty much it.
Thank you for that, Aldo. I just want to remind everyone to use that promo code STAFF when opening up an account with WESCOM. And so we are about building relationships at WESCOM. Credit unions are really huge on providing excellent service, and that's our goal. And that's why we want to promote our staff at UCLA campus branch to the staff at UCLA so we can make those personal connections. Just a quick reminder, we have our ongoing technology loan where you can earn 0% interest on a tech loan from the UCLA computer store. If you want more information, contact Aldo and the UCLA branch team on that. We also have our financial advisor. I just want to make that something that that we're all clear on, with our UCLA alumni, Carl Gerstenacker, as your financial advisor that's exclusive to UCLA as well. And then also, I want to let you know that you can always contact us on our website and at our 888 number. But I want to reiterate, if you participate, you have a chance to win today a $25 gift card. So please ask those questions and we'll be happy to answer them. And then you'll be automatically entered into our raffle this afternoon to win a $25 gift card to the UCLA store. So with that being said, I want to turn things over to Gary Hernandez and to his colleague, Tracy Lopez, and they're going to share with you part 2 of the home buying presentation. And I hope you enjoy what the information that they have to give to you this afternoon. So Gary, Tracy, take it away.
Awesome. Thank you, Sal. And thank you to Joy and to UCLA, the staff assembly, for allowing us the opportunity to share the Home Buying 101 Part 2. So today we're going to re-review kind of some credit stuff and some financing information, but also focus in on the realtor and the home buying process itself. As Sal had stated, David's going to be working the chat. This is your time. This is your lunch. So this information is geared to these folks on the call today. So if you have specific questions or inquiries, go ahead and use the chat. Tracy and I will be presenting, and as the different questions come up, we'll take those questions. All right. So we are on your time. All right. So with that being said, I'm going to go ahead and share my screen, and we'll go ahead and get started here. All right. So here we are, WESCOM Originations. That's the department and team that Tracy and I work on. I'm the director of real estate origination, and Tracy is the mortgage loan officer for your UCLA branch. So with that, we'll go ahead and get started. The next item here, let's see here. All right. So the home buying process. So there's a few things that we want to go over today. One is getting prepared. So we talked a little bit about this last time. For those of you that were with us, for those that were not, we're going to do a high-level review to get you up to speed. Then we're going to talk about what do I need in regards to cash, finding a lender, loan officer, why a realtor should be your partner, and then just closing the overall loan transaction. So getting prepared. So know your credit. So we talked a lot about understanding and knowing your credit. It gives you a leg up in negotiations and understanding where you're at, what you need to do. And so, you know, connecting with a mortgage loan officer and going through a pre-approval process would help you with that piece. Understanding your credit score. There's levels and tiers of credit. The higher your credit, the more options you are. The higher your credit score, the cheaper money is to borrow. And then the lower, obviously, it's the flip side of that. So you want to stay with the FICO score increasing. And so once you understand and confirm and know what your credit score is, in dealing with a mortgage professional such like Tracy, then she could kind of be your consultant and guide you through that process up front. Credit, use your credit. It's okay to use credit, just don't abuse it and make sure you repay it. An example of using credit, there's multiple credit cards out there. Stop by and see Aldo and he can assist. There's different cards for different reasons, right? I have a credit card that I pay all my gas and groceries with and just pay it off. Regardless of the interest rate, I get points. So I use that. If I carry a balance, then I'm going to want a credit card with a low interest rate. So again, there's different types of credit cards for different types of purposes. But using credit and paying it monthly will help your credit score. Always paying it to zero, that's a misnomer. You don't always have to pay it to zero to increase your credit score. But a guideline is keep your balance to about 30% or less of your total limit is a good place to be. Okay, so creditors and financial institutions like to see activity, and they like to see the usage, but they also like to see consistent and timely payments. Okay, so very, very important. So that's the credit piece overview. The next overview is the income. So obviously you need credit and you need income to borrow, right? So the income piece, there's all kinds of different types of sources and income streams, right? The most prevalent that we see is obviously, you know, a job, a career that pays you. And so lenders are looking for 2 years of stable income in the same position, or not necessarily position, but in the same industry as much as possible. And that starts to create stability in a lender's eyes, right? If you're moving around different industries, you know, that could be a challenge to proving stability, and it could, you know, be a mark against you. Is it the end of the world? No. If you're always working, that's a good thing. But, you know, once you start to borrow into the larger loan amounts, including mortgages, then they're going to want you to be a little more consistent in your ability to earn. Okay. Then there's other income sources. There's fixed income. There's, you know, if you're on the other side of the careers, you know, there's Social Security, pensions, there's disability income, long-term, short-term, there's self-employed, there's corporations, there's partnerships. So again, there's all types of different jobs and income sources. That's why you need to understand your own individual income and connect with a mortgage professional, and they can guide you from there. So again, credit, income, those are two main pieces in preparing for home buying. Okay. The next thing, so if you are taking care of your credit, you're working towards a career, maybe, you know, home buying is 3-6 months, you know, away from you, and you're in the market. Maybe home buying is 2 or 3 years out into the future. But being prepared, knowing your credit, and working on income is a good thing, and it's required. The next thing that you want to understand is your budget. You must have a budget. So understanding how much you can afford is much different than how much you want to pay. Okay, so if you're making, for easy numbers, $10,000 a month, right? So lenders are looking for borrowers that are making $10,000 gross income. Okay, so everything's based upon gross income. But if your rent payments, your credit cards, your auto loans, anything that would show up on a credit report adds up to about $4,300, yeah, that's where they want to see you, about 43% or less. So again, that's great. We can get you into a loan that, you don't have any car payments or credit cards. You have no debt that's owed. So we can qualify you up to $4,300. But if you're only making 10 grand a month, and after taxes, because we live in California, they take a nice bite, maybe you're only seeing 7,000 of that. You probably don't want to be spending $4,300 on a mortgage. So that's kind of the point there. You build a budget, you understand all of your debt, your outgoing responsibilities, make sure that the amount of income you're earning is more than that, obviously. And then you figure out what you can afford. And the second part is what you want to afford. So in that example, we can probably qualify you up to $4,300, but maybe you're comfortable at $2,800. Okay, so that's a you thing. You got to build your own budget, and you got to understand your own spending habits and what you want to afford. Okay. And then the next thing is documentation requirements.
Gary, can I interrupt you real fast? As it relates to the income stream and the job stability, a question came in that may relate to the documentation. Is there any COVID consideration with the stability, since we were in a weird year for most of us?
Yeah, absolutely. So Fannie Mae, one of the main investors in the secondary market, and provides a lot of the market guidelines, and then everyone kind of bases a lot of their guidelines, even portfolio products, and we'll talk a little bit about that later, are based on Fannie Mae. And during COVID, they came out with some guidance on some reprieve for some items because of COVID. A lot of it really impacted self-employment more so. If you're employed with a company and maybe you were furloughed for a little bit and now you're back, then they're not going to look at that furlough period, maybe 6 months you're out of work, as negative against you. They just want to make sure you're back to work, you're earning, you're moving forward. So in a situation like that, it probably wouldn't impact you, but you got to be back to work and get something from the employer. If you're self-employed, that's where we had a lot of challenges because we didn't know when people were opening up, when people were going to go back and start buying again and shopping and participating and adding to small business. So there is a additional overlay. So we were able to do loans, but however, they wanted additional information, like we needed an invoice within the last 10 days showing that you're currently doing business, things of that nature. Yeah, it was some tough times, but the industry tried to be as flexible as they could, understanding as possible, but we have to understand their risk. So there's risk involved there. So it's starting to loosen up more in regards to those stringent guidelines. The economy's starting to open up a little more. So there's going to be, less of that. But it depends on your lender too. A lender like WESCOM, you can work with Tracy Lopez and you can discuss the situation. And if there's a program that matches up with your situation, Tracy will find it. And if a letter of explanation is needed to complement the documentation or the gaps of employment or the gaps of business, then Tracy's going to be your consultant to help you with that. Okay, so I hope I answered that question. Great question. Please continue to have those come through. Again, this is your time. All right, so just finishing up this last piece here is income requirements. We went over that in the last session, but again, income, assets, and housing payment history is what we are looking to document, because that tells us, how you've handled your debts and your credit in the past, which is an indicator on how you will proceed to handle it in the future. Okay. All right. So next slide here is, what do I need? So cash, you need cash. So when you're buying a home, you need cash. Even though we have 100% programs, there's still a cash requirement for you to bring in some funds of your own and or have reserves for a rainy day. And that's a requirement. So how much cash do I have? And then how much do I need? So again, I just kind of touched upon that a little bit. You're going to need money for down payment, right? Closing costs. So in addition to your down payment, and Tracy's going to talk a little bit about this later. I don't want to steal her thunder, but you don't need 20% down. There's different programs. And so I'm going to give you a scenario. In the traditional purchase, right? Say it's a $500,000 purchase and you're doing 80% loan and you're going to bring in 20%. So in that scenario, you got to bring in $100,000 for down payment. So that's the amount of cash that you would need. In addition to that 100,000 closing costs. So you're going to need to bring in an additional amount of funds above the 100,000, and those additional funds range from 2 to 3% as an estimate. So on a $500,000 purchase, that could be another $10,000 or $15,000. And it's like, what is the additional 10 or 15,000? Well, you have a lot of other costs associated with the purchase of a property, right? You have to bring in funds for taxes, property taxes, homeowners insurance. You have appraisals, you have home inspections, you have title, escrow. So there's a lot of costs associated with that. And that's kind of an estimate of about how much you need. So in that scenario, now we're at about $115,000. And then depending on the loan program, it may require 2 months reserves. So if your payment is $3,000, the lender may require an additional $6,000 on top of that $115,000. So now you're about $121,000. And the reason for reserves is for maintenance. If a water heater went out or a plumbing pipe bursts, the lender doesn't want to take all your funds and then you have no money to pay the mortgage. Now you're in arrears, and you're delinquent, and it's a vicious cycle. So they want to keep you out of that. So a lot of the time, lenders will approve you when you have additional reserves not committed to the purchase itself, but mainly to be on the side in case something happens, right? So that's kind of touching upon cash, okay? Financing the balance of the purchase. So then if you're bringing in the 121,000, you need the other $400,000, right? So that's where you need a lender. That's where you need a loan officer like Tracy to kind of walk you through all of the red tape, if you will. Quite a bit of information. And for Tracy and I, it's kind of, this is what we do every day. And we love to spend time with you to kind of walk you through, to kind of give you that information to make you feel better that you're in a good position. Or if you're not quite yet there, then we can give you the information to help you get there. Okay, so this is a relationship with you guys. This is not a sale. We don't sell anyone. We consult, we assist with all the products and programs that we offer. We're a true partner. Okay. And then
Gary, with that being said, one of the questions that just came through for you and Tracy is in relation to the cash requirement, and maybe goes into the financing. This person is asking about PMI. They've heard about it, but they don't really understand it. If you can elaborate on it and maybe how it relates to the cash that you need and the type of financing programs that we offer.
Great. We will definitely touch upon that. I'm going to get through this slide. I don't want to steal Tracy's thunder. So it's going to be, PMI is going to be when you're less than 20% down, and Tracy will touch upon that. And then I saw another question in the chat about how should you look for a real estate agent? and we're going to touch upon that as well. Great questions. Keep them coming. All right. So home buying team, you need a team, right? So you need a lender, you need a mortgage loan officer, and a realtor. And then there's other third-party participants that the realtor and the mortgage loan officer will help you put a team together: title, escrow, appraisal, home inspection. So you need quite the team. And in starting off with a lender, a loan officer, and a realtor will get you there. Okay. So the next slide is your financing team. Drum roll, please, because Tracy, you got a couple questions in the chat that are part of these next two slides. And with that, our mortgage loan officer for your UCLA branch, Miss Tracy Lopez. Tracy, take it away.
Hi, everyone. Thank you for taking time out of your day to meet with us and, just learn about this whole process. I've been doing this for 20 years, and I think Gary, maybe a little longer. So, we've definitely been through different cycles of the real estate market, different types of lending, and lending's constantly changing. And so, you definitely want to have, a good lender and a loan officer that you trust, that is reputable. You can actually look up now through the NMLS, which is the nationwide multi-state licensing system. After the recession in 08, 09, the government changed, how we're licensed and how we're regulated. And so you can actually, go on there and you can see, hey, does Tracy have any flags against her? Or, if your parents referred you to a broker, you can go up and look there and make sure that you're really dealing with somebody that's reputable and doesn't have, any issues. And Gary kind of touched on this a little earlier, how much do you need to borrow? And people will call me all the time and say, I want to get pre-approved. I need to know how much I qualify for. And it's not that simple. We factor in, obviously, your credit score, which Gary touched on. And then also if you're putting anything down, and if so, how much? And then your debt to income ratio, which Gary touched on as well, your monthly income versus your monthly expenses. And the expenses taken into the consideration, again, or anything that's on your credit report, student loans, auto loan, the mortgage, property taxes, and insurance that are going to go along with purchasing the home. The stuff that we don't include, if it's not on your credit report, your utilities, your car insurance, things like that don't go into that equation. And a lot of folks think, and maybe your parents, my parents, people that are a little old school, you've got to put 20% down. You got to put 20% down, because that truly used to be the case. If you put 20% down, you are going to get the most favorable loan, and you will not have PMI, which somebody asked about. PMI stands for private mortgage insurance, or sometimes it's just referred to as MI mortgage insurance. From the eyes of the lender, if you put less than 20% down, you're a little higher risk. You've got less skin in the game. So while there are programs out there, we have one where you don't have to put any money down, well, you're higher risk. And so basically what happens is, factored into your monthly mortgage payment is this mortgage insurance. And depending upon how much you're borrowing, your credit score, it can be, anywhere from, $50-$60 a month to $300, $400, $500 a month. And that money goes directly to an independent mortgage insurance company. And basically what happens is, heaven forbid, we end up having to foreclose because you've no longer able to make your payments. We can actually go to that mortgage insurance company and get, some sort of reimbursement for the losses that we've incurred as a lender for having to, go, 3, 4, 5 months without you paying us, and then the cost that is associated with actually having to go through the foreclosure process. So once you let's say you get into a mortgage and you do have monthly PMI because you only put 5% down, you have to keep the mortgage insurance for 2 years. You've got to pay everything as agreed for 2 years. And let's say after 2 years, your property is appreciated to the point where you have that 20% equity as if you would have put 20% down. What you can do at that time is you can contact our loan servicing department. There is a process that you need to go through. You'll do an independent appraisal and say, hey, look, I paid $500,000 for this home. It's now worth 600. I've got that 20% equity. Remove my mortgage insurance. You don't have to completely refinance the whole loan to get rid of it. So it is something that's temporary, and it does offer a way to get into a home without having that 20% down. And so again, just depending upon if you put no money down, your monthly mortgage insurance is going to be a little bit higher than if you put 10% down or 15% down. So I hope that answers it. And if not, I'm happy to elaborate on the side or in the chat or whatever. And then, so I'm kind of going back to like the getting the pre-approved part, it's not as easy as just, hey, how much can I, how much am I pre-approved for? So there's an application process. Again, we run your credit and there are several steps to go through, and you want to make sure that your financing is pre-approved. You know exactly, hey, I'm offering $500,000 for this house, and I'm confident I can get a loan for that. So you want to make sure you have your financing in play before you even look at houses. And certainly, before you present an offer. Want to hit the next slide?
Yes.
Thank you. So someone also asked, the realtor, how do you go about finding a realtor? So you get your loan squared away, you're comfortable there. You need to find a realtor, and trust me, everyone knows somebody who's a realtor. Your aunt, your neighbor, your mom used to be, and just because your neighbor's a realtor and you grew up next to him, it doesn't necessarily mean he might be the best fit for you. So you want to interview, I usually say, at least 3 people. You want to find someone that's going to get along with you, because this process is very stressful. You're going to be in contact with this person probably every day. So you want someone who really understands your needs and is going to provide you, good value and truly get you into your home. They are going to assist you in finding a home. So you're going to say, hey, we're pre-approved for $500,000. We want to live in Granada Hills, that end of the valley. So you want someone who is, very knowledgeable in the area where you're purchasing. They're going to show you the houses. When you're ready to make an offer, they're going to put together the offer for you. They're going to negotiate on your behalf. It's not like you're just going to say, hey, seller, are you selling your house? You're never really going to deal with the seller one-on-one. Your agent's going to work with their agent and really negotiate for you. As Joy said in the beginning, this market is a little insane right now, and it has been. You want to make your first offer your best offer, because if a seller's presented with 5, 10 offers, they don't have to respond to everyone. They may just decide, hey, we're going to take just the person who offered the best. They may respond to everyone. They may give you a counter offer and says, okay, well, you offered 500,000, we want 510. So you really just want to put your best foot forward, and especially in this market when there is so much competition. If you have to sell your home to purchase a home, you want to have that buttoned up. You want to have your house in escrow, and so that it's not like, okay, well, we want to buy your house, but we have to sell ours first. Like you really need to have that in the works. And then, in addition to the purchase price, you're going to have to negotiate other things. How long is it going to take to close? Does the seller need to rent back from you after closing? Are there any repairs that you found in your inspection that you want the seller to fix, or you want the seller to give you a credit, to cover those items? So your realtor is going to do all that. Your realtor is going to, you're going to consult with your realtor, and your realtor is going to be the one to go to bat for you. And yeah, the realtor is the one that's going to notify, hey, the seller's accepted your offer. cut and dry, or hey, the seller accepts your offer, but they want XYZ. So again, you really want to you really want to partner with somebody who's going to go to bat for you. Yelp is a great tool in looking up agents. I mean, you can definitely verify their license through the California Department of Real Estate, but you know, I used to kind of think like, well, people only Yelp when they're angry or when they want to give a bad review, but you know, that's not the case. Like my cousin's a fantastic realtor in the San Fernando Valley, and he prides himself on Yelp. And I think he has like 130, you know, great Yelp reviews, you know, and he asks every client, you know, please put a review. And it's really worked for him. It's really, you know, put him in touch with some really great buyers.
There's one other question, Tracy, I want you to take. What is the time frame to apply for pre-approval before you start looking for a house?
Sure. So if you call me and, you know, we get your application going, and basically, you know, I usually tell people it's going to take me about 24 hours to review your application, you know, your credit report, and then your income documentation. So if you're, you know, if you're employed, you're going to send me your W-2, last couple paycheck stubs. But we can turn the pre-approvals around pretty quickly, you know, I would say in about a day.
And then what's your opinion on the market right now? When is it, when do you see, from your perspective, on either prices coming down or rates going up? That's the question on people's minds.
Yeah, and you know, if I had a crystal ball, I probably wouldn't be here with all of you today because I'd be on an island in the Bahamas. But yeah, you know, the government has kept rates low as we've, you know, been through this crazy pandemic, and you know, the water cooler talk, you know, so to speak, is once the economy starts to recover and we see more and more people back to work and we see things opening up, rates are going to naturally progress upward. So you know, we've gotten so used to the 3%, 2%. I mean, my first house was 8.5%, and that really wasn't all that long ago. And you know, I was so excited because I was buying a house. But as rates go up, you know, that's going to kick people out of what they can qualify for, because obviously your payments are higher. So, you know, typically as rates go up, you know, we will see a leveling off on prices. You know, is there going to be a huge crazy drop in prices? My personal opinion is no. I mean, I do think we're going to see a correction. You know, what's different now versus in 2008, 2009, when we did see, you know, a big crash and a recession, was the requirements to get a loan back then, to qualify for a loan in like the early 2000s, was really not much. It was credit score, and then basically you wrote on your application, yes, I make $10,000 a month, or I make $15,000 a month, and there really wasn't any verification necessary. So you had people obtaining loans that, you know, really they were going to struggle to pay. So the pendulum swung, you know, completely in the other direction. And I will be the first to tell you, during this process, I'm going to keep asking for more documentation. Oh, you got paid Friday? I need that pay stub. Oh, you got a bank statement? I'm going to need that. You know, we are continually updating documentation to prove that you can afford this house and you're going to pay us back the $500,000 that we're going to lend to you to buy this house. So sorry, that was a short answer, very long. As we expect rates to go up, you know, without any like, you know, unforeseen second pandemic. And, you know, with rates going up, you know, we should see prices level and hopefully more inventory, you know, coming on the market.
All right, great. Thank you for that. And then Tracy, just this last slide, since we're talked about you as a huge part of the team, your realtor, there's a couple other players in here as well. Let's see here.
Yeah, so Gary talked about closing costs, you know, and people automatically think closing costs, like it's all for the loan. It all goes to the lender or the broker or, you know, the credit union, and that's truly not the case. You know, our fees at WESCOM are very low, you know, around $1,100. And if you're a preferred, platinum signature member, it's even a little less. But that 2 to 3% of the purchase price goes to your inspections. You want to make sure that the property you're buying is in sound and not going to fall over the day you get the keys. And then these are 3 other, pretty big parts of the transaction. The title company, you're not necessarily going to really speak with them probably during your transaction, but they're very important. They're sort of behind the scenes, and they make sure that anything that has to do with the seller, like if the seller has a loan on the property or back taxes, or someone is suing the seller and there's a lawsuit somewhere, that all of that goes away once you are the new owner. So that when you're moved in, you're having a Super Bowl party, no one's going to knock on your door and say, hey, the guy who used to own this house owes me 10 grand, pay up. That is all taken care of. So, you're going to pay a fee for title services. The escrow company, I call them the referee. They are a disinterested third party that makes sure everyone's playing by the rules. There are so many people involved in a real estate transaction, and the escrow is, they kind of keep everybody sane, I guess, so to speak. And they handle the money. So when you get an offer accepted, the seller's going to say, hey, I accept your offer, but I want $5,000 from you, to take it off the market to other potential buyers. Well, that $5,000 doesn't go to the seller. It goes to the escrow company. They hold on to it while you do your inspections, while you get your loan approval. And then when everything comes to a close, and we're going to give you this $500,000 to buy the property, well, it doesn't just go to you, and it doesn't just go to the seller. It goes to the escrow company, and then they'll take that $500,000 and pay off the mortgage that the seller had, and back taxes that the seller had, and then whatever is left over, then that goes to the seller. So they're sort of a pass through. And it's, again, they're just to make sure that everything's on the up and up. You pay a fee for their services. And then the appraiser. So the appraiser is going to be different than your home inspector. Your home inspector is going to check the appliances, the air conditioner, fireplace, to make sure it works. The appraiser is definitely concerned with the integrity of the property, but they're not going to climb in the attic or under the house. They're going to go in and say, okay, public record has this as a 3-bedroom, 2-bath. There's 3 bedrooms and 2 baths, not 5 bedrooms and 3 baths. They're going to say public record has this at 1,500 square feet. Okay, well, we want to make sure it's 1,500 square feet and that there's not some crazy weird add-on addition that isn't up to code. So they're just going to make sure that the property is what everyone thinks it is, and that it's properly zoned, and that it's of health and safety requirements. So they are going to look for smoke detector, water heater, double strap, certain things that we're concerned of as a lender, as well as you should be concerned of as well. And then most importantly, they look at comps, sales comparables, houses that are the same size, the same upgrades in the immediate same neighborhood. If you're paying $500,000 for a home, we want to make sure it's worth $500,000 and not $350,000. So that's what the appraiser does. And all of these parties are very important to the transaction, but a lot of people just don't know exactly what they do.
Awesome. Thank you for that, Tracy. Great job in helping us understand what the team that you need to put together and what everyone does. So thank you, Tracy. All right, let's see here what we got next. Okay, so Tracy talked about the piece on the lender, the mortgage loan officer, the loan, and the realtor. And so when you have all that ready to go, then the fun starts with going out shopping, right? And you guys have heard this before, right? When you're going to look for a property, what matters? Location. What else? Location. And what else? The location, right? So it really does make a huge difference on where the property is. It really does, right? Even down to which direction the front door faces, where the sun rises, if you're on a slope, if you got a house on top of you, how close the neighbors are, is on the other side of the fence, is that the city dump, is there railroad tracks? Is it next to Fraternity Row? So there's a lot of things that you have to think about, because you're buying a house. You're not renting this. You're buying a house, and if you desire to reside in it as your primary, location's going to make a huge difference in your decision. So when you're looking at location, you should have a prioritization list to get you thinking what I would want in a home. And then once you go out looking, make sure you stick to that list as much as possible, right? You want to think about, hey, where do I want to live and can I afford it? So, and that's a conversation you can have with Tracy. If you can't afford it, then where do I start? And how long do I stay there? Then I sell and upgrade. So Tracy can consult with you on that. Then you got to think about, commute. The commute the last year's been nothing. I've been home a lot of the time, so that didn't really have a factor. But once you go back to work, or you're looking to work, or start your career, you want to think about that. Where do I work, right? School districts, if you intend to have a family or you have a family, that's a biggie, okay? And then just, what do you do on weekends? What else do you want to do? What's going on around the house? What amenities can you get to? Easy access, not necessarily walking. I mean, it's nice to walk to everything. That's why a lot of people like Santa Monica or different cities. But once you get in the suburbs, there's other amenities and activities that are close, and you want to keep those things in mind, okay? And then, have you considered, right, the number of bedrooms and bathrooms that you need, the square footage that you would be comfortable in? What do you need in outdoor space? Do you need a patio? Do you need a backyard? Do you want a porch, right? Again, preferred location, type of home. Do you want a condo? Do you want a single family resident? Do you want a duplex? Do you want a 2-unit? Live in one, rent out the other. The way the layout is, do you want an open layout? There's so many different things, features and finishes. Again, school district, pet friendliness is a big one, right? If you're a pet lover. And then we talked about the work commute. So you should go through all of this with you and your partner, your spouse, your family, your parents, whoever you would like to help you with this decision. Do all this before you go out, because you want to have your financing handled and ready to go. You want that trusted realtor that you feel good about working with. You want to know what you're looking for, where you're looking for it. And then you can go out and just have fun. Let's go, realtor. Let's build me a list. Let's drive me around on a Saturday, and let's go look at some houses that meet my criteria. That's the fun part. Okay.
Gary, I'm just going to interject something really
Sure.
quick, because this is all great information. And you're going to see this real quickly once you are out and about with your realtor, and you do come across homes that you're going to consider making offers on. You are not going to find the perfect home.
No.
You are not going to find a home that has everything that you need. So, that's when you need to get real with yourself, with your spouse, with your kids, whatever. Hey, is it more important for us to have a bigger backyard or a second bathroom? Because you're probably not going to get both. So, I guess just kind of don't get frustrated, because, you're going to look at houses that are like, wow, this is really great, but gosh, there's one bathroom. Or gosh, this is really, really great, but it's next to a gas station, so you're going to have to compromise.
Yep. No, good point. Good point. Okay. And we just have a few more minutes here, and I have the last slide, and the last slide's kind of like a summary, and it's just one list, but this list is like 3 months or 6 months. So I just wanted you to keep that in mind. So a lot of the work is done up front. You're finding your financing, you're getting your credit, your budget, you're meeting with a loan officer like Tracy, your realtor, you're figuring out what you want. So all that's up front before this slide. Okay, and then you got all that ready to go. And it could be tonight, Wednesday, you find a house and you're working with your realtor, and they submit the offer. And they submit it with a nice letter, hey, me and my family and my daughter love your home, and the tree with the tire swinging, it's our perfect house. you laugh, but you got to write letters like that because the sellers are people and they want to feel that. They want to put someone in their home. So it's important. Then you get your offer accepted, you're on the clock. It's a contract. It probably says 30 days, most likely. And then everyone's on alert. Then you got to call Tracy. Tracy, I got my offer accepted. You get that over to Tracy. Tracy will make sure that she gets it into her loan operations and they start working on the loan. They open escrow, title's ordered, the appraisal inspection occurs, and then you get that information. You send your own inspector in there to make sure you are good with the property, because you're going to have to meet with Tracy to say, hey, is my loan good? And is my appraisal good? Because my realtor is asking me to lift these contingencies off the contract. And once you lift your contingencies, your deposit goes from soft to hard, which means if you don't perform and close, the seller's going to keep your money. So you have to do all of this in this order. And then once you're good and you feel good about the loan and the appraisal, you take that off the contract. The lender approves the loan. Then you do your final walkthrough. Hey, the window was broken, that needed to be fixed. The stairs fixed. And you're walking through your final walkthrough, everything is fixed, you're good to go. Then the lender funds your loan, then you get the keys to the castle. So again, this is kind of, just a list of kind of the overall process, but it's quite the process. It's fun if you're prepared and you meet with the right consultants. You can make this a wonderful experience. With that, questions back to you guys. This is your time. Any other questions? Anything else that you guys would like to know? All right, and here's just a slide. This is Tracy's information here, her email address, her cell phone number. The 888 number gets us into our department, and they can always get you over to Tracy as well. We just appreciate the opportunity. We hope you enjoyed and got some value out of the information. Please don't be a stranger. Reach out to us. We're here for you. Thanks, guys.
Thanks very much.
Gary, Tracy, thank you so much for that presentation. And I have to just say myself, just through my own experience, it could be a challenging experience. And how you laid it out and explained it, will help those who are especially first-time buyers to at least have some form of expectation of what they're getting themselves into. And just to speak to the current market right now, yeah, it is a crazy market with interest rates being so low. There's a lot of competition. And Tracy, I love the point that you made as far as being honest with yourself in terms of where you're at, where you need to go, and the type of home that you're going to get. And don't get yourself caught up in making a decision that you're not comfortable with. Don't compromise yourself in this process, because the last thing you want is to be in a loan and then into a home that you're not completely satisfied with. But when you have the right team working with you, whether it's your agent and whether it's the loan processing team that's helping you fund the loan, they can help you guide through and reduce the stress of this important transaction. So I just want to thank. Yeah.
I'm going to say one more thing, because that's so important. Is a lot of people look at it as, this is an investment. Am I making a good investment? And am I going to see a return on my money? And while that's important, I always try to encourage people to look at your quality of life too. Like, are you going to double your 20% down? Are you going to double your investment in 2, 5, 10 years? Maybe not, but is your family going to be happy? And so I really try to get people to look at the long term.
No, that's a great point, and I appreciate that, Tracy. So with that being said, Tracy, with the last bit of advice, we have our winner for today's raffle and participation. Her name is Samantha Liu. Samantha Liu, you are the winner of the $25 UCLA store gift card. So Samantha, if you could please just put in, if you can connect with David Bochter in Messenger with your contact information. We'd greatly appreciate that. So Samantha, congratulations. And I want to say thank you everyone for joining us this afternoon. Joy, Jessica, the whole staff assembly team that joined us today in the audience. Thank you so much. This is such a pleasure for us with WESCOM and doing these presentations. And we have a lot more presentations that we can offer in the future. So please, staff assembly, reach out to leadership and let them know what type of topics you would like to hear us discuss. And we would be happy to present to you in the future. So with that being said, Joy, I'll turn it back over to you with any closing statements.
Awesome. This was so helpful, very insightful and enlightening. So thanks very much for this. Very fantastic presentation. Thank you for all the work that y'all put into it. So with that, yes, thanks for coming and we'll see you next time.
Go Bruins.
Go Bruins. Thank you.